Have you ever heard the saying, a penny saved is a penny earned? It's a classic piece of advice, but it doesn't tell the whole story. In today's world, a penny saved isn't just earned, it's an opportunity. It's a chance to grow into something much bigger. That's what investing is all about. And the amazing thing is, you can start with just a single dollar. You might be thinking, $1? What difference can that possibly make? It's a natural thought. We're used to thinking that investing requires large sums of money, something only accessible to the wealthy. But that's simply not true anymore. The truth is, it's not about how much you have, but how early you start and how consistently you invest. Time is your most powerful ally when it comes to investing. The earlier you start, the more time your money has to grow. Even if you can only invest a small amount regularly, the power of compounding can work wonders over the long term. Imagine a snowball rolling down a hill. It starts small, but as it rolls, it gathers more snow, growing larger and larger. This is what compound growth does for your investments. Your initial investment earns returns, and then those returns start earning returns of their own, creating a snowball effect that can lead to exponential growth over time. The best part is, you don't need to be a financial expert to get started. There are countless resources available today that make investing accessible to everyone, regardless of their income or experience. From micro investing apps to low-fee investment platforms, you can start building your financial future with just a few taps on your phone. The key is to take that first step. Don't let fear or intimidation hold you back. Remember, investing is not about timing the market or becoming a Wall Street whiz. Before you even think about where to put your $1, we need to talk about something even more important, your mindset. You see, investing isn't just about numbers, it's about changing your relationship with money. It's about shifting from a mindset of scarcity, where every dollar feels like it's slipping through your fingers, to a mindset of abundance, where you see money as a tool to build a better future. Think about it. How often do you spend $1, maybe on a coffee or a snack, without giving it a second thought? Now, imagine taking that same dollar and putting it towards your future. One of the biggest hurdles for aspiring investors is the feeling that they need a lot of money to get started. This couldn't be further from the truth. In fact, starting small can be incredibly empowering. When you begin with a small amount, like $1, you take the pressure off yourself to make huge returns right away. Instead, you can focus on learning the ropes, experimenting with different investment options, and most importantly, building the habit of consistent investing. Think of it like training for a marathon. You wouldn't expect to run 26.2 miles on your first day of training, would you? You'd start with short runs, gradually increasing your distance and endurance over time. Now, you might be wondering, if I'm only investing $1 at a time, will I ever reach my financial goals? The answer lies in the power of consistency and discipline. You see, the amount you start with is important, but it's your commitment to investing regularly that will ultimately determine your success. It's like building a muscle. The more you work it out, the stronger it becomes. Similarly, the more consistently you invest, even small amounts, the faster your wealth will grow. Don't underestimate the impact of small, consistent actions over time. Think about a bamboo tree. For the first few years, it may seem like nothing is happening. Below the surface, however, the roots are spreading and strengthening. Alright, so you're ready to start investing with that first dollar. That's fantastic. But now you might be wondering, where do I even begin? It's a common question, and luckily, the answer is simpler than you might think. You see, in the past, investing felt like this exclusive club for the wealthy. But today, it's all about accessibility. There are so many options designed specifically for people who are just starting out, even with minimal funds. We're talking about apps and platforms that make investing as easy as ordering your favorite takeout. No more intimidating jargon or complicated processes. Just simple, straightforward ways to put your money to work. Remember, the goal here isn't to become an investment guru overnight.
North and South medley, played by the United States Marine.
One of the most beginner-friendly and accessible ways to start investing with just $1 is through micro-investing apps. These apps are like the pocket change jars of the digital age, but instead of collecting dust on your dresser, your spare change is put to work in the stock market. How cool is that? The concept is ingeniously simple. You connect the app to your bank account or credit card, and every time you make a purchase, the app rounds up the transaction to the nearest dollar and invests the difference. Let's say you buy a coffee for $3.50. The micro-investing app will round it up to $4, investing that extra 50 cents on your behalf. Now you might be thinking 50 cents? That's nothing. And you're right, on its own, 50 cents won't make you rich. But here's the thing. It's not about the individual amounts, it's about the power of accumulation and consistency. Think about it. How many transactions do you make in a week, a month, a year? Probably more than you realize. Another fantastic option for investing with limited funds is through fractional shares. Now, in the past, if you wanted to invest in a company's stock, you had to buy a whole share, which could be quite expensive, especially for well-established companies. But with fractional shares, you can buy a portion of a share, making it possible to invest in companies you believe in with any dollar amount. Think of it like buying a slice of pizza instead of the whole pie. You get to enjoy the taste and be part of the pizza experience without having to eat or afford the entire thing. Fractional shares work similarly. Let's say you've always admired a particular tech giant, but their shares are trading at hundreds or even thousands of dollars each. When you're investing with small amounts, it's crucial to be mindful of fees. High fees can eat into your returns, especially over the long term. That's why it's essential to choose low-fee investment platforms. Think of fees like a sneaky tax on your investments. The higher the fees, the less of your money is actually working for you. Low-fee platforms, on the other hand, allow you to keep more of your hard-earned returns, maximizing your investment growth potential. Now that you've dipped your toes into the world of investing with your first dollar, it's time to start thinking about building a portfolio. But don't worry, this isn't about becoming a Wall Street whiz or trying to predict the stock market's every move. In fact, trying to time the market is a fool's errand, even for seasoned investors. It's like trying to catch lightning in a bottle, incredibly difficult and often more about luck than skill. Instead of stressing about when to buy or sell, focus on what's called time in the market, not timing the market. This simply means that the longer your money is invested, the more opportunity it has to grow. Think of it like planting a tree. You've probably heard this saying, don't put all your eggs in one basket. Well, in the world of investing, this adage rings truer than ever. Diversification is key to managing risk and maximizing your chances of success. It's like having a well-balanced meal instead of just eating your favorite food every day. When you diversify your investment portfolio, you're spreading your money across different asset classes, industries, and geographical regions. This means that if one investment performs poorly, the others can help cushion the blow, reducing your overall risk. Imagine you invest all your money in a single company, and for some reason that company faces unexpected challenges. Here's a secret to building wealth that many people overlook: reinvesting your returns. You see, when you invest your money, it has the potential to generate earnings, whether it's through dividends, interest, or capital gains. Now, you could choose to pocket those earnings and treat yourself, which is perfectly fine from time to time. However, if you're serious about growing your wealth exponentially, reinvesting those earnings back into your portfolio is where the real magic happens. Think of it like a snowball rolling down a hill. As it rolls, it picks up more snow, growing larger and larger. Reinvesting your returns has a similar effect on your investments. Section 4. Never stop learning. Investing in yourself is the best investment. Learning is a continuous process. Stay curious, informed, and adaptable. Think of it like tending to a garden. Nurture your financial literacy. Information is readily available. Use books, podcasts, and online courses. Embrace learning. The best investment is in yourself. So there you have it. We've debunked the myth that investing is only for the wealthy. You can start building a brighter financial future with just $1. It's about taking that first step and shifting your mindset. Commit to a journey of financial growth. That first dollar is like a seed ready to sprout. With time and care, it can blossom into a tree of wealth. Micro investing apps make investing easy and accessible. Take control of your financial future today. Remember the feeling of empowerment when you realize that starting small is a stepping stone to lasting financial habits? It's about consistently showing up for yourself and your financial well-being. Each dollar invested is a brick laid building your financial dreams. Diversification creates a resilient portfolio, navigating market ups and downs. Millions are taking control of their financial futures, proving financial freedom is attainable for everyone. Patience is key in investing. Just as a tree takes time to grow, so does your wealth. Market fluctuations are inevitable. Remember the power of long-term thinking. Avoid short-term market hype or panic. Focus on your goals and let investments grow. Like a farmer, investing takes time and care. Reap the rewards of patience and consistency. Please like, subscribe, and share. See you next time.